Welcome back to PrimeWorth, the channel where we make sense of money, markets, and your financial future. In today's video, we're diving into the three major types of finance that shape our lives: personal finance, business finance, and public finance. Each one plays a unique and essential role in how money moves from individuals to companies to governments. Before we begin, if you haven't already watched our previous video, What is Finance?, go check that out first. It lays the foundation for today's deeper dive. In this video, we'll go beyond definitions and explore how each type of finance works, why it matters, and how it impacts you, whether you're managing a budget, running a business, or just trying to understand the economy. Let's start with personal finance. This is how individuals and families manage their money. It covers budgeting, saving, investing, credit, debt, insurance, taxes, and retirement planning. From paying bills to planning a vacation or saving for college, personal finance is about using your income wisely to build a secure and meaningful financial life. Imagine you earn $5,000 a month. You have to make decisions: how much to spend on rent, groceries, gas, streaming services, and how much to save. You might use apps like Mint or YNAB to track your expenses. You might put money into a high-yield savings account or invest in a Roth IRA. Every choice you make with that paycheck falls under personal finance. Managing debt is a big part of personal finance, especially in the US. Many people carry student loans, car loans, or credit card debt. A good credit score built by paying bills on time and keeping balances low can help you get better rates on mortgages or even rent an apartment. Tools like Credit Karma or Experian help you monitor your credit report regularly. Saving is more than just setting money aside. Experts recommend saving at least 20% of your income if possible. That includes building an emergency fund that covers 3 to 6 months of expenses. After that, consider investing in retirement accounts like 401ks or Roth IRAs, which offer tax benefits. Time and consistency are key to growing your money. Investing is how your money earns money over time. In the US, index funds, ETFs, and stocks are common investment tools. Starting early and investing regularly, even small amounts, can lead to major growth thanks to compounding. Apps like Fidelity, Charles Schwab, or Robinhood let you get started with little money and automate your investing strategy. Don't forget about insurance. It's a vital part of personal finance. Health insurance protects against medical emergencies. Auto insurance is required in most states. Renters or homeowners insurance protects your property. And life insurance can support your loved ones if something happens to you. Insurance prevents financial disasters before they start. Taxes are another key piece of the puzzle. Every year, you'll need to file a tax return with the IRS, reporting your income and deductions. You may owe taxes or receive a refund. Understanding tax brackets, credits, and deductions can save you money. Tools like TurboTax or hiring a CPA can help you stay compliant while keeping more of your hard-earned income. In the end, personal finance is about control. Control over your money, your choices, and your future. Whether you're paying off debt, saving for a home, or planning for retirement, every good financial decision adds up. Personal finance empowers you to live life on your terms, free from financial stress and prepared for whatever life throws your way. Business finance. Now let's talk about business finance, how companies manage their money to stay afloat, grow, and succeed. This includes raising capital, tracking expenses, analyzing profits, managing risks, and preparing for the future. From local small businesses to billion-dollar corporations, business finance is the engine that powers the American economy. A business may raise money through loans, investors, or by selling stock. For example, a startup in Austin might pitch to angel investors to raise $250. That capital could fund development, hire employees, or launch marketing. Business finance guides how to use money strategically to reach company goals and avoid costly mistakes that could lead to failure. Once the business has money, managing cash flow is key. It's not just about profits, it's about timing. A company might sell a product today but not get paid for 30 days. Meanwhile, bills are due. Poor cash flow can sink even profitable companies. Tools like QuickBooks, Xero, or FreshBooks help small businesses track income, expenses, and cash balances. Financial reports are the backbone of smart business decisions. The income statement shows whether the company is profitable. The balance sheet tracks assets, debts, and owner equity. The cash flow statement reveals how money enters and leaves the business. These documents help business owners and investors make informed decisions and plan ahead. Business finance also involves managing risk. That could mean purchasing business insurance, building an emergency fund, or diversifying income streams. For example, restaurants with strong online ordering systems during COVID-19 were better equipped to stay open when dining rooms closed. Financial planning helps businesses stay prepared and resilient. As businesses grow, finance becomes more complex. They may expand into new markets, open new locations, or even go public. Larger businesses often hire CFOs and financial analysts to guide long-term strategy, forecast earnings, and respond to economic shifts. Smart finance ensures that a growing business doesn't overextend or run out of capital. Let's not forget small business owners and freelancers, they need business finance too. If you're a graphic designer, Etsy seller, or Uber driver, you still have to budget, track income, set aside money for taxes, and plan for slow months. Using separate business accounts and apps for invoicing can help keep your finances clean and IRS ready. Business taxes are also a major piece. Depending on how your business is structured, sole proprietorship, LLC, S-Corp, you may need to pay quarterly estimated taxes, self-employment tax, and payroll taxes. Hiring an accountant or using software like Bench or TaxSlayer can save you time and prevent costly errors when tax season rolls around. In short, business finance is about more than just making money. It's about managing it wisely, protecting what you've built, and using it to grow. Whether you're an entrepreneur or running a Fortune 500 company, strong financial planning is the difference between success and struggle in today's competitive marketplace. The bottom line, business finance keeps companies alive. It allows them to hire employees, serve customers, and innovate. It also drives job creation and economic growth. Understanding how businesses manage money can even help you be a better investor, customer, or future business owner yourself. Public finance is how governments manage money. This includes raising revenue through taxes, borrowing funds, budgeting, and spending on services like education, healthcare, and defense. In the U.S., public finance operates at 3 levels: federal, state, and local. Each level collects taxes and allocates money based on its responsibilities and the needs of the population. The federal government collects income taxes, payroll taxes, corporate taxes, and tariffs. States collect income, property, and sales taxes. Local governments often rely on property taxes to fund schools, police, and fire departments. These revenues fund everything from social programs like Medicare and Social Security to infrastructure like highways and bridges. Each year, Congress passes a federal budget that outlines how much money will be spent and on what. If expenses exceed tax revenue, the government borrows money, usually by selling treasury bonds. U.S. citizens, foreign governments, and institutions buy these bonds, essentially lending money to the government in exchange for interest payments over time. One major component of public finance is managing the national debt. As of 2025, the U.S. national debt exceeds $34 trillion. Borrowing isn't inherently bad. It can help fund emergency relief or infrastructure, but if not controlled, it may lead to inflation, higher interest rates, and reduced future government flexibility. Debt management is a balancing act. The Federal Reserve plays a unique role in U.S. public finance, although it's technically independent. It sets interest rates and controls the money supply to influence inflation and employment. For example, lowering interest rates can boost borrowing and spending, while raising rates can slow inflation. These actions ripple through the economy. Public finance decisions directly impact your daily life, the quality of your public school, the reliability of your city's water system, and even how quickly your street gets plowed in winter all depend on public budgets. When budgets are tight, essential services may be cut, which can affect everyone, especially low-income communities that rely heavily on them. Government spending also stimulates the economy. During recessions, stimulus checks, unemployment benefits, and public works projects are examples of fiscal tools used to maintain economic stability. In 2020, the CARES Act provided trillions in aid to individuals and businesses, an example of large-scale public finance in action to combat economic crisis. Understanding public finance helps you see how your taxes are used and why voting on budget-related issues matters. For instance, a local school bond or state proposition may directly impact how your neighborhood is funded. Being financially informed makes you a stronger citizen, capable of making decisions that shape your community's future. Thanks for watching this video on PrimeWorth. If you found it helpful, give it a like and subscribe for more finance content made simple. Leave a comment below. What area of finance do you want us to cover next? Personal investing, business budgeting, public policy? We're here to help you understand money so you can make smarter decisions every day.